also trade this on the NASDAQ. So there's a buy trade there. So that trade there, there's a buy trade. Boom, brilliant profit. Maximum drawdown of 1 tick. So there was a buy trade. You see it? Remember, Max uses an order flow entry so that if the sell keeps coming in, even after the Max trade triggers, it doesn't take a buy trade. It waits for the buys to appear. Just like the class I've just done about the commercial appearing, Max waits for the commercial to appear and then takes the buy trade. So the buy trade is not necessarily always going to be here. If you see 2 or 3 greens in a row, your probability is that it's going to be when the Max switches off, you see the buy trade coming. So at some stage here, the trade did come in, and you would have obviously been buying into this. Now, where you would have bought into this is Max's decision. It might have been at the bottom price. It might have been at that price. It might have been at that price. But whatever it did, it made a very, very nice Max profit on that trade, 1 out of 1. There's the sell trade. Isn't that exciting? Isn't that exciting? Because it top ticks the market right there. So the sell trade would have probably have been around about 2 3/4 for the sell trade. So there's the Max sell trade maybe coming in there. And the sell-off was spectacular, 2 out of 2. A buy trade. So you'd have probably, we never got a downtick on that buy trade, so it probably would have been on this uptick. So that's the trade there. You can see it went from that price there. And it went from a 80 1/4 up to 81s. 3 ticks. So that might have been a scratch just there. It might have put a stop in at break even. And if it did, of course, that's okay because it never made any money. It simply got to break even and scratched out. So that's okay. That works. We're happy with that, guys. That's not a problem. We'll take it. So you probably scratched out there. You might have lost a tick on it. You might have been, it depends on the fill, of course. Max came in for another buy trade at the lows here. So you can see that Max buy trade had a very, very reasonable response to that upside and made another good target price. Pretty good. 1, 2, 3, 4, 5, 6, 7 ticks. So you definitely got your $50 out of that trade. No problems, no danger. That's been the last one we've had so far, is that buy trade there. So again, an incredibly high success rate, 1 scratch trade. Every other trade was profitable. Add that to your spread trades, and things are looking up. Things are looking up. So we tidied up some of the coding last night. Unfortunately, we never got. We just basically ran out. We were still. Some of the boys had left, but the G-man was still here, and he was still coding at sort of 1 o'clock, 1:30 this morning. So we just basically ran out of time to get the graphic on it better looking for the time being. But the underlying code is stronger. It's more robust. It's got a little bit more to it, and it's just you just don't see anything physically different about it. But it's got a lot of improvements, as I said, under the bonnet, and we did finish about 1:30 this morning, which is why last night's tweets were a little bit later than usual. But anyway, welcome in, guys. It's just after 1 o'clock, 1:10. We're all good this morning. It's been a choppy market, rotational type quality business. Fortunately, our sterling trades worked out. We had a little chat about the sterling trade this morning. We went in detail into gold. But I was chatting to everybody about buying up these discounted sterling products, and I'd suggested that it was a slow burner because of the dollar. Well, we finally got the response we wanted, and we've had a good one, to be honest. You see the shape of how it developed. It's taken a long time, but then just about every trade that we've done this morning seems to have taken longer than we thought it probably should have taken. But there we go. We got a nice buy trade off the lows, and we've had a very good buy side response eventually. And that's okay, because that's what we're doing, making some monies. We had a long chat about gold, which is a pity because it was probably quite a good little class we did on gold. It showed some incredible opportunities to sell gold this morning for an enormous profit. There was some brilliant macro short value, and this is a 5-minute chart so that guys can see exactly what we were talking about this morning. And because if you were on a 1-minute chart and you were zoomed in, you wouldn't have seen that sell opportunity at tens. But anyway, that sell at tens eventually went for $1,500 per contract into a massive distribution and then into a buy trade. And there's a lot of technical reasons why this was a buy trade, and the biggest one, of course, was the fact it was the 1790 wholesale price. It was the biggest liquidity you've seen so far today, and we talked about that this morning. And we had a chat about the idea of front-running Goldman Sachs and taking the chance that you were going to get spoofed, which is exactly what happened to gold, or doing what Stuart recommended, which was waiting for the real buyer to show up and then take the trade. Because there was a spoof type order on gold this morning. This is the screenshot we took. As the price of gold was dropping, you saw buy orders coming in at 1795s. 1795s, $500 higher than where the price actually ended up dropping through. So those buy orders came into a very, very good technical level, and buyers did come in this area. Buyers started to show up in this area, trying to take advantage of that bid that was on the limit order book. In other words, somebody was front-running the buy-side liquidity. Somebody was front-running it. And then what happened was that the buyers pulled away their liquidity. You might be able to just recognize that green line getting crushed. The buyer that was sitting on the limit order book that didn't buy any trade, but got lots of other people to buy a trade, probably actually sold trade to the buyers. It's a spoof. It's a classic spoof trade. And that sell pushed the price all the way down until we saw the buyers pulling away. Sellers now pushing the price down. And the sellers pour in, and the sellers say, there's no help for me here. I've got to get away from this. They then ran the stops at the big 1790. And we got this big sell order at the same time as a sell delta. Sell orders and sell deltas. The market's got to keep dropping massively. And yet somebody bought thousands of contracts on gold. Somebody bought thousands. Not somebody that's telling you that they're going to buy thousands, because the order book suggested that somebody was saying, I'm selling thousands of contracts, right? That's what the order book's saying, shouting it loud and proud. I'm selling thousands of contracts, and somebody sells thousands of contracts. The price doesn't drop. Somebody bought those thousands of contracts all around one price area. Somebody was on the bids without being visible. Somebody was taking the piss. The big liquidity at 1790 got run. The buyers came in, not visibly, invisibly. The buyers came in invisibly, and we rattled the price out of this area. We had this big rip off the bottom edges from 1790. And the gold price ended up trading up to a high price of 1796, where we saw the opposite taking place. We saw the buy side book appear, and we saw the buyers appear behind the buy side book, and a seller took all their business at 1796. And the price hasn't been able to go above 1796 since then. It's crazy, isn't it? So the buyers appear on the book, the buyers appear on the deltas, and the price stops moving higher. Because of all the buyers, the price stops moving higher. In other words, a commercial opportunity to sell or to exit for $600 profit. $600, I may add, on 1,000 contracts, which makes up a $600,000 profit that the buyers made in a period of approximately 20 minutes. 20 minutes for a commercial profit of $600,000, guys, on gold. On gold. It's not even in the metals market volumes. It's in the London volumes at lunchtime. It's nuts, isn't it? Absolutely nuts when you understand it. Hopefully, when you understand it, you start to get this idea squared away in your own heads. It's beautiful. Absolutely beautiful. Anyway, the short bond came in. Remember I said about that short, the difficulty going any higher than the 13s to the 16s, guys? Well, guess what happened? This is what happened. The interesting thing about this, Kim, is that this chart was live at this stage here. This is what we were talking about at that point on the charts in the room this morning, and the guys will tell you this. In the room this morning, that's what the chart was looking like. And we said, look, there's a lot of reasons to get away from this trade. Number one, of course, was the fact that it was a half-back trade. Number two was we had a lot of supply here. We had the big supply from the US session here, and we had more supply here. So we've got 3 supply areas right above us. And I said, look, guys, it's going to be very difficult for the buyers, even if you want to progress through those areas. It's going to be very difficult to progress through those areas. And what happened? That's what happened. The price couldn't progress through any of the areas. The sellers came back in. The buyers got absorbed. The buyers ran out of steam. And the sellers took over and started to drive the price down. And the volume on selling started to build all the way through to this climactic sell exit at the bottom edge here. Every time it happens, isn't it, guys? It doesn't matter how many times we show charts. It doesn't matter how many times we talk about trades. It doesn't matter how many times we think about these ideas. When we see these processes happening, they always seem to work out, don't they? They always seem to end up being exactly right. And that's why we make money, right? You can see that what happened here with the absolutes was the absolutes looked quite good at the time when we got into the buy trade, but the absolutes changed their minds, not at the top edge, but as the price started to fall, the absolutes started to fall out of bed with the trade until we started to see that climactic volume into the absolutes again there, into the 24s. You would have been looking at it saying, okay, I see this big volume here, but that's not probably big enough. That doesn't look like the commercial buy that I'm looking for. This looks like the commercial buy I'm looking for here. Look at the difference in the volume, significantly higher. That's your buy trade. That's the real money buy opportunity just there, isn't it? And that's where you would have bought your bonds back in again at that stage there. That's where you'd have bought back in. Pretty good? Well, it's good enough because that's the perfect time of the day, 1300 hours. You're probably surprised you never got more volume than that, to be honest. So you've obviously got to remember that we do have some pretty, it's a Friday, for example. We don't have any big US data, for example, at half past. So there's probably a lot of people going to wait for the US cash open because that's going to be the first real volume of the day coming in. So a lot of people just squaring positions, squaring ideas, thinking about where we're going to be going to. In terms of absolutes, it still looks like it's a buy trade. Now, in terms of the inflation break-evens, first of all, let's take a look at the gilts markets. So the gilts markets were one of the reasons why the sell, you can see what happened with the gilts. They've never been bullish today. Not once did the gilts go bullish this whole process. So you can see what happened in here. There was a little turn, and then we got this very bullish gilt coming in on the low tick on the bond, wasn't it? So we got a very bullish gilt coming in there, and that's why that buy trade really managed to make at least a fair profit. We went from 21 low price to a high price of 28. So that's a good enough profit. I'm happy with that. You see the gilts are still quite happy to be long the market just now. So this still looks like quite an interesting long trade. Still looks like quite an interesting long trade just now, guys, in bonds. So what else would we be interested in? Inflation break-evens must be essential on your screens. That's an obvious. Let's take a look at equity hedging. This is one of the difficulties because when we bought this, the equity hedge was a good enough buy trade. It didn't really develop much upside. You can see it sold in behind that down move. The macro still looks okay for this. I'm quite happy with this, but short term we've got some supply coming in from the hedging side of the business. So you can obviously start looking at that and saying, yeah, you know what, possibly they might still press it lower, but we can deal with that if it happens. Let's take a look at the inflation break-evens from the perspective of just oil prices. You can see that the oil price, you might be saying, how could you have bought that when the oil price was rising? Because the oil price was rising, but it was still just trading into the prior swings. It wasn't trading into new higher highs. So that's a good idea. We can simply trade that if we see it. The oil price subsequently has sold off those highs, and that puts us into the mood to buy bonds into that area. I have bought some more bonds, by the way, just there in at 22s. I don't know if anybody joined me at 22s. But I did buy some bonds at 22s just there. If anybody decided to play in the bit of business there, I like your style. It does give us a stop at break even already, so that's okay. We can deal with that. We're in pretty good shape. But I'd like to deal 17s, 18s, 19s, 20s. It's the US session. We should be able to gain some liquidity, surely. So I'd like to deal at slightly lower prices, but we'll see what happens. Let's take a look at inflation break-evens. So here's one of the problems we had at the top edge. You can see that inflation break-evens, like the bonds and like equities, never really picked a bid up at the same time as we were long off the bottom edges. So the inflation break-evens came in quite heavily on the short side here and drove the price down into the lows. The inflation break-evens, like oil, have now given us that opportunity to bid once, pause, and then twice. You can see we've managed to make two profitable trades from those inflation break-evens, as we've just been discussing. And that's pretty good, isn't it? We've now seen the price going up to 28, so congratulations, guys. A nice, easy trade. Take some profits, top edge, and stops at break-even if you don't mind, guys. That would work, right? Happy with that outcome, Tim? Happy with that outcome? It's quite a nice little trade, isn't it? I'll just pop that into the folder because it is still a trade that may develop further um, as the afternoon progresses. So we'll just pop that into the folder.
Hey, good morning, everyone. Happy Friday. Hope you're doing well. What a fun start to the day watching Max progress. We'll take it. And yes, that was about a month ago. I went and looked almost exact to the day, 24th. That's when we started with the Ninja account. So probably even less days because you have to get everything all set up. But that was when it started for the testing.